The auto market has been in a tough spot this year as affordability issues weigh on the sector, including inventory challenges. While looking ahead to 2025 for the auto space, the load of challenges, well, it's not necessarily looking any lighter. CarGurus U.S. Director of Industry Insights and Analytics, Kevin Roberts, joining us now to discuss here. So as we look at some of the big themes of 2024, is affordability the one that kind of trumps everything else?
Yeah, I think affordability was kind of the throughput trend for 2024 for the auto industry. We definitely saw consumers, after kind of years of revenge spending coming out of COVID, pivot pretty hard to affordability this year. And it really came down to high vehicle prices and interest rates at multi-decade highs really kind of increased those monthly payments for consumers. And that led to kind of trickle-down effects for the greater industry.
Kevin, I want to spin forward into 2025. Start with Trump moving back into the White House. That means tariffs front and center. How are you thinking about that policy, potential ripple effects, impact on the U.S. auto industry?
Yeah, much is uncertain at this point. So we've done analysis on it. If you look at the end of November, roughly over 50% of listings on our site were from U.S. built vehicles. So you could say roughly over half of inventory would be, removed from those. So it really comes down to where would tariffs be impacted, what countries would they go into effect, and really whether they happen immediately or if there's a little bit of forewarning for the industry. I think if there's forewarning, the auto industry is very adaptable and can move around and kind of reallocate resources. But if it goes into immediate effect, that's where it'd be a little bit more disruptive for the industry.
So that could affect sort of flow of inventory, sort of pricing as well. And then something else that could affect pricing is the whole debate over EV tax credits. We know how Donald Trump feels about them. We know how Elon Musk feels about them. How do car buyers feel about them?
I mean, the tax credits are definitely a benefit for consumers right now, particularly as EVs tend to be higher priced than comparable hybrids or internal combustion engine vehicles. So the loss of tax credits would definitely be a headwind for the industry in 2025. And it's important to remember that's both on the new side where there's an EV tax credit and also on the used side. There's a $4,000 used EV tax credit for used EVs under $25,000. And at the end of November, about a third of used EV inventory was priced under that price point. So that's another headwind that we could see for EV adoption in 2025.
But let's say, Kevin, that the credit disappears and I'm a consumer, I still want that EV, that plug-in hybrid EV. I'm looking for a relatively more affordable option. What would be some of my choices?
So where we've seen a lot of prices come down is actually in the used EV side of the market. Like I mentioned, over a third of used EV inventory was under $25,000. And we've seen a lot of interest in those used EVs out there. It's also important to note that a lot of automakers are bringing more and more new EVs to the market price, and they're starting to bring down the prices quite a bit as well. So we're starting to see starting prices in the 30s and 40s on a lot of these new EVs. And so that, I think, will help to drive adoption, even if we have the tax credits go away.
What's sort of the big picture for where sales are going to go this coming year?
Yeah, so we're currently expecting relatively moderate growth for both new and used sales in 2025. Again, that is, a baseline forecast assuming relatively no tariff adjustments and tax credits continuing on. And so any of those shifts could shift where we see forecasts going at this point. But the industry still continues to recover from the semiconductor shortage, and we're seeing prices start to moderate on vehicles. And again, we're looking at interest rates starting to come down as well, which should help drive further demand in 2025.
What about finally, Kevin, auto delinquencies? I know you all point out auto loan delinquencies on the rise. I'm just curious how you see that developing into next year.
Yeah, it's a trend we're keeping an eye on as auto delinquencies get back to more natural levels. They were pretty depressed with the amount of COVID stimulus that was out in the marketplace. What I'm really keeping an eye on is the loans that were originated in 2021, 2022, when vehicle prices were at their absolute peak. We could see a large number of consumers who might be underwater on those loans now, above what kind of long-term trends are. And if delinquencies start to rise on those loans in particular, keeping an eye to see what happens and if we might see a higher rate of defaults there.
Will there be any kind of pivot or move to higher priced vehicles next year?
It's something we're also keeping an eye on. U.S. consumer generally likes to kind of stick with their long-term trend, which is, larger trucks, larger SUVs, higher priced vehicles. We've seen them pivot towards more affordability in 2024 with those interest rates high. But as interest rates start to come down, we could see consumers start to go back to their, true loves, which is those larger trucks and SUVs. And so we could see a little bit of rebound in higher priced vehicles in 2025.
Kevin, great to see you and have you on the show. Thanks for joining us.
Thanks for having me back.